Welcome to the Florida Divorce Podcast, your source for the information you need to successfully get through your divorce and into the next exciting chapter of life. Now, here's your host, Attorney Scott Kalish.
Hey everybody, this is Attorney Scott Kalish. I'm a divorce and family law attorney here in South Florida. Today, I have Jason Spillman on, forensic accountant. How's it going, Jason?
Good, Scott. Thanks to have me back on the podcast.
Yeah, no, for sure. Today, we're going to talk about stocks and how they play a role in a Florida divorce. So let's just jump right into it. Tell me about equity compensation. How is that handled in divorce from a forensic accountant perspective?
So I think there's two main things that you see a lot of times nowadays. I think a lot of big companies are doing it as well as smaller companies. They're trying to incentivize their employees with equity compensation, which includes stock options and what they call restricted stock units, or they refer to them as RSUs. A stock option is sometimes, let's say you're doing a divorce of someone that works at Home Depot and they're an executive at Home Depot. Part of their compensation will be maybe they'll grant you 10,000 options in Home Depot or a certain number of restricted stock. And it's a way for them to incentivize people to make the company profitable, make the stock do well. It's kind of it's an incentive type of compensation. So when people get divorced, obviously the assets are in play and the income is in play. So these type of awards become sometimes controversial because they're a little complicated to decipher. But an option, it will give you the right to purchase stock. You don't have to purchase the stock. But let's say Home Depot is trading at $100 and you have an option for $50, which is what they call the strike price. You can buy that stock in Home Depot for $50 and it's instantly worth $100, right? So there's value to you of $50. Let's say Home Depot is trading at $30 and the strike price or the exercise price of the option is $50. You can't exercise that stock and make any money because the strike price is higher than the current market price. Obviously, in a perfect world, the employees would like to get options in the company and then the value of the company goes up. So someone that receives options is incentivized to make the company as valuable as possible so their options will be valuable. Options typically have an expiration date. So you'll get granted an option in Home Depot, let's say for $50, and you have a number of years to exercise it. At any time you could exercise it. What's different about options is you get taxed only when you exercise the option.
Gotcha.
So like, let's say Home Depot's worth $100 and you have a strike price of $50. You don't have to go buy the stock for $50. It's kind of a one transaction type of deal. So you don't get taxed until you exercise it. On the other hand, there's what they call restricted stock units, and those are normal shares in the company, but they also vest over time typically because they want to incentivize you to stay with the company and they want to incentivize you to make the company more valuable. But those, when they vest, they become freely tradable shares. So I would have shares in Home Depot and you get taxed when they vest because then you receive a portion of a share in the company. But as you can imagine, with all this vesting and tax issues, a lot of times we come in as forensic accountants to try to sort it all out for equitable distribution purposes, but also in terms of determining someone's income for alimony and child support.
And you just did a case that involved these issues, right?
Yeah. So I actually have had multiple cases recently involving these issues. And the big issue is what they call a coverture analysis. So let's say you file for divorce and the next day you receive options. You receive 100 options in Home Depot and they vest over 4 years evenly, right? So 0% of those options will be marital options. But let's say 2 years ago, you received a 4-year vest in 100 options in Home Depot. What we would do is we would calculate the fraction because I guess the legal concept is the marital labor and where that went, right? So let's say you got them 2 years ago and you filed for divorce right halfway through when those options were vesting, a portion of those would be marital options And a portion of those options would be non-marital options.
Starting with the date of filing of the divorce case. And that's sort of our boundary between the two, non-marital and marital. Yeah.
So the filing of the divorce action creates a boundary. But as you can imagine, there's all types of schedules. Sometimes they'll vest 1,000 up front and then 100 every month. So you need to figure out what they call each tranche to figure out what's the right percentage of marital versus non-marital. And that could be very complicated because of all the vesting schedules and things of that nature. And restricted stock are very similar, where we'll have to do what we call a coverture fraction.
Question for you. This is more of like a practical question. And in your experience in these cases recently with these issues, did you have to uncover the existence of these stock options or the RSUs, or were they just freely sort of disclosed? So my question is that where can someone sort of look to just confirm whether or not these exist, right? Is this like discovery you're propounding to the employer, or is this something that you can see on a pay stub? If you came across this, like where are you seeing like objective evidence of their existence?
Yeah, so I think there's a lot of documents that anytime there's one of these types of plans, a lot of times people know about it. A spouse will know that, oh, like, you know what I mean? Like, I'm sure when you worked at a job, your spouse knew your base salary and bonus and things like that. A lot of times this is part of their package, right? They have a W-2 salary plus bonus, plus options, plus restricted stock. So when these vest, you'll see them on a W-2 or you'll see them on a pay stub. But like, for example, the options, they're not taxed until they are exercised, right? So maybe someone got options and it didn't show up on a tax return yet because there's no taxable event. So a lot of times, like as part of discovery, we'll get the employment agreements, we'll get W-2s, we'll get pay stubs. For companies involving options or restricted stock, we'll also try to get the stock plans, those types of documents. Because I think the big issue in these types of matters is, are these awards being issued for past service or to incentivize future service, right? Because let's say I get those stock options granted to me the day after I file. If that was a reward for previous, let's say I crushed it the past 2 years at my job and that was for those past 2 years when I was married, that would be considered a marital, even though it was received a day after filing, those could be 100% marital.
And I want to make sure everyone understands the reason for that. And that's because the work that was done to earn that benefit was during the marriage, as opposed to work not being done or work not being started yet, right? So if the work starts during the case while or after the date of filing, then that would be considered non-marital under Florida law.
Yeah, and there's also ways that you could look in the public domain, right? Because let's say your spouse works at Home Depot Corporation.
Sure.
Home Depot Corporation is a public company. You could go look up and see what's going on with their options. Maybe your spouse may not be high up enough where they disclose that in the financials, but you may be able to get a sense that like there's some type
this is a possibility, and we can like propound some discovery to Home Depot asking for any stock options or RSUs, that were offered to this individual. Yeah. I mean, it's a great point, right? That I think is overlooked sometimes.
And privately held companies have these also, which it's easier when you're dealing with a bigger company because you could tell what the market price of the stock is. Another issue with actually dividing these is a lot of times you're dividing an asset that's kind of a contingent asset, right? Because let's say I've gotten 100 units in Home Depot that vest over 4 years. 2 years from now, I may not be working at Home Depot. I could get laid off. I could go change jobs. Home Depot could get bought by another company and become, Lowe's and Home Depot could merge and become a different company. So there's a lot of considerations that you need to take when valuing these, because if you work at this company and you're not sure that you're going to work there, do you really want to pay out your spouse for value that you may not get if you end up leaving your company? So a lot of times these types of assets, they're held, and plus you can't necessarily, there may be transfer restrictions, right? I can't transfer my options in Home Depot to Scott Kalish because he doesn't work there, or I can't transfer them to my spouse because they don't work there. So a lot of times when these end up getting settled, one spouse will hold them in what they call constructive trust on behalf of the other spouse. Or you may be able to negotiate it out where one person holds the stock and the other person takes some other type of asset. But the risk in all of this is a lot of times you don't know what the value of the stock is going to be. Like, let's say right now, Home Depot's trading at 30 and my options have an exercise price at 50. I don't know. Maybe after the divorce, Home Depot shoots up to 100. So there's some issues there as it relates to how do we actually divide these? And what are we dividing and how we negotiate and what all these things are really actually worth. It also gets tricky when you're dealing with restricted stock because you're also dividing a brokerage account. And a lot of times these restricted stock, they vest into a brokerage account. So a lot of what we do as forensic accountants is we're like tracing and making sure we're dealing apples to apples in terms of taxes, right? Because $1 of cash is not worth $1 of securities that may be subject to tax. And also just tracing and making sure we don't double count the division of a brokerage account or double count the value of an equity award.
Sure. With your recent experience, were these companies publicly traded or were they private companies or both?
I would say both. I see it all the time. I mean, public companies, you probably see more often because they're huge and they have all their middle managers may end up getting some form of compensation, and not even people who are quote unquote wealthy, right? There could be someone making $100 or $200 a year and they get $50,000 a year in equity compensation, right? Like obviously that's a lot of money, but here in South Florida, that's very common. You know, you're not considered like super high net worth at that level. So it's interesting because we get involved in cases involving people who are also employees of companies because of some of these issues.
How do you deal with valuing stock options or these RSUs with a relatively smaller, like let's just say like a middle sized private company? Like how are you valuing those?
Well, we don't really end up valuing them because it's so subjective, right? So in a case like that, we may end up just figure out what portion of the units are marital versus non-marital, because a lot of the times with the privately held companies, you don't know what those options are going to be worth until there's some liquidity event.
Gotcha.
So like, let's say I've done all my calculations and I've determined that, you know, this conglomerate of dry cleaners, which I think I've used on the podcast before, this conglomerate of 10 dry cleaners, let's say I have options and I've determined that they're 25% marital, right? So 25% of those units or really 12.5% of those units would end up being held. Half of the 25 would be held by one spouse who owns it or has rights to it in constructive trust. And if and when there's some liquidity event and those group of 10 dry cleaners rolls up into a private equity firm, that's when you would get paid out after tax. But it's really difficult to value these things because it's really contingent on some type of future event. But at the same time, the earnings of those happened potentially during a marriage, which is something that we really need to be cognizant of.
With these stock options and RSUs, how do they play into, you know, the issues of like, are they equitable distribution, like more of like a property right that we have to divide, or are we considering them for income, right? For purposes of alimony or child support? Can you kind of walk us through what you think and your experience on that?
Yeah. So I think that's like the $1 million question, because I think it all, and I hate to sound like a typical accountant or lawyer, but it really depends on the facts and circumstances, right? Like, is this a normal part of their compensation? Like, here's some of the questions I would look at is like, are they always getting this? Is this an every year thing or is this a one-time event? I think that would probably play into the legal arguments that get made.
Absolutely.
Does this person have access to that money, right? Like, I could be granted options, but they're all below the strike price or what we call outside the money, right? So they're not really worth anything or they're not really a source of cash. I get these restricted stock, but they're kind of in a privately held company. They're locked up. I can't get liquidity from them. I can't borrow against them. I can't sell them. So I think those are all the things that we would look at, but it's really a gray area, I think, in the law and also in finance, because it kind of is both, right? Like if you own stock options, it's an asset, but it's also, if you get them regularly, it's also kind of a source of income. So it really depends. And these are like some of the debates that we have between forensic accountants and mediators and
on different sides of the case, for sure. Yeah.
Just because of the facts and circumstances. And these are the things that we discuss, whether it should be included in alimony calculations or not. But you just have to be really careful that you don't double count, because the same thing that you're saying is non-marital or is a marital asset, you want to also make sure that you're not also including that specific award in the person's income. It really, these things sometimes they appear easy at the surface, like, oh, it's just 50% marital. But then there's all these little tax issues. And when you actually have your equitable distribution chart and it comes to splitting these assets, there's all these very little small things that you need to be careful with.
For sure. No, I think that's a great point. And lastly, I guess to leave the audience with this part, the tax aspect. I mean, how would you sort of characterize or frame that part of having this in a case?
Yeah. So the tax aspect is important because it's, especially if you're dealing with like a long drawn out divorce, like were the taxes paid on marital units with marital funds, or were they paid with non-marital funds? Like sometimes things could get very thorny when it comes to taxes. Are we dividing the current brokerage account, which includes options that have vested that are also non-marital? So should I be getting a credit for taxes? I mean, the tax issues, depending on the timing of the date of marriage, the timing of the date of filing, the time of when you actually divide these things during a mediation or a trial date. I mean, all those things, whether you're filing jointly or continue to file jointly or file separately, it's always, unfortunately, the facts and circumstances always change the nature of these cases. But I think any asset, you need to just be very careful that you're comparing assets on apples to apples basis, because you don't want to take an asset that's subject to tax in your column of equitable distribution versus someone who gets an asset free and clear.
That's not subject. Yeah, you're absolutely right. No, it's something to be cognizant of and to keep in mind, right? The tax aspect and what money may have went to pay those taxes. So, I mean, it's definitely something that has to be addressed and, looked out for, because it could be a significant amount of money. Well, I really appreciate you coming on the podcast again to talk about this nuanced sort of issue. And obviously you'll definitely be back again. Thanks.
Absolutely. Thank you for having me on, Scott. It's always a pleasure.
Of course. Take care.
Thanks for listening to the Florida Divorce Podcast. To learn the 10 secrets behind every successful divorce, visit FloridaDivorcePodcast.com. If you'd like Scott's help in your divorce case, go to KJLawFLA.com.